Hi there, hello everyone. Today I'm going to present before you CB Consumer Confidence Index. This is a very important economic indicator as part of my fundamental analysis tutorial series. So let's see what we have. So what it is, it's a financial confidence and it is a leading indicator of consumer spending which accounts for a majority of overall economic activity. Okay, the CC report, the Consumer Confidence Report, is highly valuable in determining the monetary policy by the Federal Reserve Bank of USA. And the CC report is released monthly by CB, the conference board. It is an independent economic research organization. And what this consumer confidence about, it is a survey, and this survey determines that how people are currently feeling and their expectations over the next 6 months. And how it is determined, it's a survey of about 3,000 households with 50 questions, and the respondents are asked to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. And what are the survey indices of CBCCI? It actually surveys on current and future economic situation for about 6 months on these three factors: number one, business conditions; number two, employment; and number three, income. Okay, so when the data is out, so if the actual data is greater than forecast, then it's good for currency. If actual data is smaller than forecast, then it's bad for the currency. And it is released monthly on the last Tuesday of the current month. And this consumer confidence index is categorized as red news and forex calendar, which means that forex traders need to look out and watch out this data and then determine their trading strategies. Okay, and CB stands for conference board. So some more detail about conference board consumer confidence. The base confidence level of 100 of the CCI was introduced in 1985. The conference board declares an economic recession when they determine that the CCI level falls below 100 for 2 or more consecutive quarters. So if it falls below 100 for 2 or more consecutive quarters, then it means we are entering a possible recession. Okay, it also contributes this consumer confidence data into GDP and economic data as well. So if the economic output is good, then it means that the CCI is better, and if the economic output is bad, then it means that the CCI is also giving us negative outlook. Okay, all right. So consumer confidence outcomes. So if the CC figures are falling, that could indicate weakness in economy, and if there's a strong data of CC, then it means that the economy is strengthening. Okay, so what happens when the CB consumer data is out in the market? So we could have a possible output of CC data either above expectations or below expectations. So in either case, it could have a positive or negative effect on the US dollar or US dollar driven markets. Okay, so what could be the possible outcome based on this output data of CC? So we can have a better than expected or lower than expected. Okay, all right, fair enough. So if we have better than expected, then there could be strong US dollar versus other currencies, and if it is lower than expected, then the US dollar could be weak against the other currencies. So for forex traders, trading can be very important based on the yardstick of CC data, the consumer confidence data, and they can analyze their spread betting or CFD trading strategies as well. So what could be the trading strategies for the forex traders? How to trade based on the consumer confidence figures or data release? So you can possibly see volatility in the market. Okay, the prices can go up and down based on the data release. So there could be a possibility of trading into profit or trading into losses. As a trader, you have to figure out that what strategy or how best you have to use the consumer confidence data release figures. Okay, all right. Okay, so when we are talking about trading strategies, we look at the volatility generated by this consumer confidence data figures. So either it could be profit or loss. So it could be short, large term large short-term profit or greater short-term losses as well. Okay, that could be the possibility. So when that happens, then you have to have your risk management strategy in place. So it's therefore very important to pay attention to your risk management approach. Okay, you cannot avoid that and you cannot forget that. You have to have that in place. And then you have to have your risk management action plan in place if you see that something proves to be incorrect based your analysis on the basis of consumer confidence data. Okay, all right, you have to have your risk management strategy and risk management action plan in place when you see that there is a volatility in the market and you may have a large short-term profit or greater short-term losses because of the volatility generated by consumer confidence data release. Okay, all right guys, I will stop here. I hope you liked the video. I will see you next time. Have a good day. Bye bye.